Hello and welcome. I'm Chris Principe, publisher of Financial IT, coming to you live from Sibos 2025. And we're in one of the financial capitals of the world, Frankfurt, Germany. Really a nice host visiting for us. And it's part of the interesting thing about Sibos is that every year it's in a different part of the world. And we get to see all that's going on in the financial space there. Right now, the talk on Sibos, the talk on the floor has really been around three things, okay? AI, we've been hearing about that and we will continue to hear about that. But tokenization and stablecoins really are starting to take central stage. And I've got two guests for you that are not going to dead in that space. And I want to introduce to you Alan and Stephen.
Thanks very much. So my name's Steve Vinnicombe. I'm the CEO of Mac Technology from Delta Capita, which is a technology that is trying to maximize the benefits that our clients can reap from digital assets. And it's also straddling the seam between traditional finance and decentralized finance.
My name's Alan Philpot. I'm Chief Products Officer at Mac Technology. So my role is driving the strategy, innovation, the roadmap of the product. I've been doing this for many years. And it's a strong passion.
Well, I tell you, it's exciting to have both of you here because this is an area of my own personal interest. I've been following this for quite some time, and we've seen, really a surge recently driven by regulation because there wasn't regulation before. But you guys have looked at this space very carefully for quite a bit of time before that. Can you tell us a little bit about the history?
You want me to go first?
Yeah.
So my background has been, 10 years now in designing platform solutions for the space, leveraging the technology. And what I would say, we've been on a few cycles, and this for me is the third time round now where we're getting the real momentum. So what I described earlier today when talking to someone was that we saw a lot of hype and interest in the technology and a lot of experimentation, the art of the possible around the tech. And then what really happened, there was that surge in technology, there was interest, and then people then suddenly stopped the interest in crypto. There was challenges in the DeFi space. So we focus on regulated markets and how we can apply the technology. So there was innovation, technology interest, and then quiet. And so we've continued to innovate. We've continued to listen to the marketplace, and we've designed our platform with regulated markets in mind. We've never deviated from that. Now what we're seeing is, as you mentioned, change in regulation, particularly US policy, has driven a significant interest in, I'd call it on-chain money versus stablecoin. There's been a lot of interest in central bank currency, deposit tokens, and their stablecoins. Our technology is designed for three. And really what we expect is the surge in interest today, really in order to take it to the next level, needs on-chain money. And we're really agnostic to the means of that. Tokenized an asset, which I'm sure we're going to get into, relatively straightforward and simple. Interoperability, network connectivity, we need on-chain money.
The on-chain money aspect really interests me because we're not actually hearing a lot of people talk about it here. Yeah. So is that an indication of how much further you're ahead?
We think we're ahead in a couple of key aspects. Our platform holds conventional, digital and tokenized assets on the same ledger, and many choose to separate those. We think for efficient capital markets, you want all of those things in the same place. And I think the other means of competitive advantage that we have is we describe our platform as hybrid. And what that means is we are a blockchain platform. We can ask our participant clients to use blockchain to communicate with us. But if they want to use Swift, or API, or even manually enter the data, they can. We're trying to make the hurdle for adoption of the platform as low as possible.
Well, I think that's really an important consideration because, yes, regulation has been some barrier when it comes to the crypto world, but people being able to access it and understand it, companies being able to access and understand it, and the banks themselves, it's a challenge. So how do you look to try to meet that challenge?
Well, I think the first thing we've done is we've partnered with a business in Europe where the law and the regulation is relatively advanced versus other areas of the world. America has been unusually slow to take advantage of digital assets and digital cash, although they're coming up on the rails now in the second Trump administration. So places like Luxembourg and Germany very well-defined laws and regulation that allow for the use of digital assets, the reduction of operational costs, the reduction of capital, and things like fractionalization of ownership, which will increase revenue streams and increase liquidity. So there's lots of opportunity in Europe to address all of those different aspects of benefit, which is very unusual for a technology or indeed any business enterprise to have a capital benefit, an operational cost reduction, and a revenue increase. So we're very excited about Europe, but globally now, people are understanding those benefits and the regulation is catching up. So it's not even. We expect America to move very quickly, and the crypto field there is definitely on the rise. But certainly in the Middle East, in Hong Kong and Singapore, the regulation is advanced or advancing, and we expect further business opportunity there too.
Yeah, no, the regulation certainly is a big part of it. But let's talk a little bit about product and the products themselves. And one of the things we talked about was collateral and tokenizing collateral. And to me, from my experience, it's such an important thing. And to give you an example that I keep thinking about all the time, especially coming out of the banks, is, you have a building that's worth $10 million. Yes, bank could say, okay, we'll take that as collateral against a loan, say, for $8 million. But you have 2 million more. So when you mentioned fractionalization, that's what made me think of it. Is now, can people actually get used to that?
Yes, I mean, we've done use cases where we fractionalize an asset, right? For example, the bond instrument is high entry, right? So fractionalizing a bond is technically straightforward. It's not that difficult, but it's the complexities associated to the operations and the life cycle that is more complex, particularly when you get into fractionalization, coupon payments, distribution, etc. So that's one aspect. And as we talked about earlier, tokenizing an instrument of any kind is straightforward. There's lots of technologies here this week that can all do that. I think the challenge that the industry is facing with is the complexity of the life cycle. And what we focus on as a product is not just doing issuance, not just doing wallet management, key management, all of the new technical components. Our platform does it full life cycle, right? So, and that's taken years to engineer. And the reason we took that approach was people can interact with the components or they can take the full suite. So really working with us, we think we will enable organizations to go faster. We think we can solve some of the complexities. And what's obvious to me, and I've come from industry and I've worked in industry and now I'm in fintech, is banks will go as fast as they can go given their complete book of work. They have technology challenges, they have a change book of work already, they have regulation to deal with, and they have customer business, right? So they're focusing on their business, and what we hope is they partner with organizations like us to help them enable their digital business. And we're interoperable, as Steve mentioned, right, with new technologies and legacy, right? And that's been our approach for, as I say, for as long as I've been involved in the product, and particularly with Delta Capita Group for the last 2 years, but we've been innovating this product for 7 years.
And the other thing we should add on the collateral, but particularly the way you started that question, is we already work with the DTCC as Delta Capita more broadly. They've been very, very active in the collateral tokenization space. And they were on stage earlier talking about $100 trillion worth of assets that they process. And they're actively looking to tokenize collateral, those assets, as collateral so their clients can break the boundaries of the operating models that exist today, where they can only move collateral in certain operating hours or within constraints of certain systems. So they're looking to create a digital ledger which is open nearly 24/7, and that collateral will be highly mobile and be put to work on a far more efficient basis than it is today. So that's the sort of use case that we're seeing globally. DCCC obviously has a bit more gunpowder than everybody else to fire, but there's plenty of opportunity for others to do the same.
Yeah, I really like hearing more about the use cases and the products, because we're hearing here at Sibos, there's a lot of innovation we hear, but most of what you hear is people saying we will do, we're thinking of doing, we almost can do. You guys have been doing and can do for like a long time.
And I think and this comes back to adoption and how you enable it. And I think there's a bit of inertia around, you don't need to convert the whole market we have today to new technology, right? Instruments that are issued, bonds, for example, expire. So you've got a natural point where you can let bonds expire and issue the new way, right? And people have talked about structured products here this week as a particular instrument. There are asset classes that you can focus on that you can today transfer to digital because law allows it, regulation allows it, and the instrument allows it. Right. So I think if the industry thinks smarter about the way it can enable the digital marketplace, it can convert by asset class. It doesn't have to be this huge market migration of legacy onto new. And that's where we as a business have focused our sweet spot is where can we enable, where can we innovate, and where can we transform organizations? And that's been our focus for years. And now we're just starting to see that come to market. So you're right, when you hear what is possible, we hope to start tipping that into what is live and therefore create even more momentum, right?
It brings up an interesting point for me also because it seems, and the way you explain it, I really appreciate because it's very clear and it makes it very simple. So why isn't everyone doing it? So is there are we at a point right now where education becomes an important part?
So I think, yes, I think it's education. I do think there is still, there's a lot at play here. There are businesses that are trying to figure out how they survive and what is their role in the new world. So you'll hear a lot about actors in networks this week, for example. So there's a lot of business to protect. There's a lot of reasons not to innovate and to stay as you are because there's a lot of inefficiency, which equals P&L.
Yeah.
All right. So and it's a tipping balance. So at some point you have to start thinking about it. But come back to this education. I think there is education broadly across the industry. People are learning fast. And whilst we explain it, and we like to simplify, that's part of what we do. The complexity is in the engineering capability, the product design solution, and make it as easy as possible to convert. So our focus, and Steve talked about it, right, is the reason we've used the Swift capability is because the industry operates like that today. The reason that we use APIs, the industry operates like that today. Under the hood in our technology, we have full key management capability within the technology platform. We've chosen a HSM solution because the industry adopts HSMs today. It's all known ways of doing things. And it just makes it easier for the technology teams of our clients to understand. We think it makes it easier to adopt. And we're just now trying to get, again, there's that hype curve and we're at the front of it, where we're now trying to bring this to market, convert businesses, and particularly a very close focus on product.
Yeah. The other thing that's interesting to me also is that, a lot of people talk about products and all, but it starts to become more about how do you connect to those products and how do you connect to people. So it can go into like an API conversation. Otherwise, you can't get the value out of the products. Mm-hmm. How do you approach that?
So again, and I'll let Steve come in on this, right? So if we look at our particular components, we focused on business process, right? We focus on issuance, and you'll hear people talk about bit parts of that this week. So, but we focus on the digital issuance, the full life cycle management, and one of our key components is Bridge. Everyone's calling their product Bridge, but we connect the old world to the new digital world. We also have the ability to connect private and public blockchains. So there's a big conversation this week about TradFi DeFi, right? Which is, we get the conversation. I think there's different investor profiles in each side, right? But our technology, the way we built it, is we're trying to make it simple as possible and people to understand. You talk about interoperability. There's been a lot of conversation around standards this week, but not deep conversation around tokenization standards, right? There are different token forms already, and we talk, if you talk about interoperability and standards, there's 20, 30 at least different token standards, for example, which is the right one. And so what we're trying to do is we listen to the market, we listen to clients, and we adapt our technology to be flexible to say, right, we can make it as easy as possible for you to connect to these public networks in this token standard, and this is the way you control your instruments. So there's a lot of thought gone into, not how we can enable it, but also control it. We talk about security and cyber and all the other aspects, right? Most of the people we talk about here are banks and financial market infrastructures, heavily regulated. Things cannot go wrong. They have to be industrial grade, right? And that's what we bring into market. So all of that, the thinking around product isn't just about functional capability. It's about the robustness and the secureness of the technology as well, right? Because it's the most important thing.
Would like to add something on that, Steve?
Well, I think that we're extremely excited this week, to your original question, that it isn't we will and we might, it's we have. And so what we've heard is people have tokenized government bonds, people have tokenized equities, people have tokenized money market funds, and it's been done at scale. Digital issuances have been longer at scale, but they're being done in all of the asset classes in all the jurisdictions. So it is no longer theoretical, it's no longer a plan, it's been done. And now I think what we expect to see is a scaling of all of those use cases throughout the life cycle. We talked about corporate actions yesterday, we talked about collateral management. So the full life cycle, native digital issuance, tokenization of different asset classes that have real value to investors. We expect to see that all at scale over the coming years.
Well, I tell you, it's very, very interesting to me, and I almost feel bad asking my favorite question, right? Which is, what do you see for the future? Because I see from your organization, you guys have already, you're like 10 steps in the future ahead of everyone, and really, it's very impressive. But if you can you share with me a little of your opinions on where the industry's going and what you think we'll see?
Yep, I think I'd repeat or re-emphasize that point about scale. We're going to see widespread adoption. When you see people like the DTCC and Clearstream, these are established incumbents with major digital programs, and they're responding to huge client demand globally. So we're going to see the custody banks, we're going to see asset services respond in the same way. Investment banks, we'd expect to see huge adoption of native digital issuance, tokenization, and we believe the efficiency of holding those new assets together with conventional ones give huge efficiency when it comes to matters of collateral management or the cost of funding. So we'd see huge scale, and I think that we'd also expect regulatory maturity, because there's still some questions about not just the regulation for some of the new digital forms of cash and asset, but as Alan was referring to there, standards. How do you underwrite the economic terms or the technical validity of some of these digital forms of asset and cash? That's going to be vitally important to building trust. So we'd expect to see some developments there too.
Alan, from the product, the technology side, where are you headed?
So for us, we'll continue to innovate, predict, project where we think the market's going. My personal view is I think we're going to end up in a place where we will have a new digital regulated market community that isn't public DeFi, that will have less actors, more dominant actors. One of the challenges, I mean, we could talk about in Europe, right, is there is a proliferation of CSDs. In the US, there's one. In Europe, 20 or 40 or whatever the number is, right? I hope, and I also have a fear, I hope that the market infrastructures create a true interoperable shared network. And we don't have what we have today, which is disparate, disconnected market infrastructure. My fear is that everyone is developing their own ecosystem that is disconnected already in pilot form. And what they need to do is actually step back and collaborate properly and create a single infrastructure. And I don't think that is the central bank that does it. I don't think it's a regulatory or the market infrastructures. But somehow they need to really develop a platform or a solution for the investor and the issuer. The rest in the middle needs to be figured out. The technology allows that. But my worry is that we design tomorrow the same as we've done the past.
Well, I'll tell you, it's really exciting stuff that you guys are doing. Your organization is at the forefront of an area that's a personal interest of mine and for a lot of people out there. I wish you the best of success going forward. I really hope that I can keep track and be able to see where you're going, and enjoy the rest of your Sibos.
Thank you very much.
Thank you very much.
Thank you.
Alan, really appreciate your time with Financial IT.
Thank you.